Welcome back. What action will the Bank of England take on July 14th? The survey says...
There you go. And let's find out what Mitul Kotecha, head of Asia Pacific Rates and FX Strategy of Barclays, think. So BOE, a big meeting. Our online poll reveals probably a 25 basis point cut. What do you think?
Well, I mean, the market has moved along the line of your online poll in the sense that the market has largely priced in a rate cut at this meeting. However, we think the Bank of England will probably wait until they
Why wait?
Well, they'll probably want to see data in the aftermath of the Brexit vote. If anything, the data has already started to soften. We've seen some weakness in consumer confidence surveys, business surveys. But I think what they'll probably do is time this alongside the quarterly inflation report. They'll get a little bit more information, and then they can determine exactly how much of easing will need to be done. I mean, we think they could ease up to 50 basis points, add anywhere around 100 to 150 billion sterling in more QE as well. So there's certainly a lot in the pipeline for what the Bank of England will do, but perhaps not as early as this meeting. That doesn't mean you may not see one or two or even more Bank of England members vote for a rate cut, but we think they'll probably delay.
Is there a certain point for sterling to drop that actually causes capital outflows? I mean, it's already lost 20 cents since Brexit.
That's right. I mean, it clearly has weakened sharply, although we've seen a recovery over recent days. The reality is that sterling is going to continue to remain under pressure in our view. At what point does it result in significant outflows? Well, I think already we have seen some outflows. The problem for the UK is it has a current account deficit, so capital outflows means that it's a bit more difficult to fund this deficit. Nonetheless, sterling is looking cheaper. There are a lot of investors who may look to invest in the UK as sterling cheapens further. So I don't think it's going to result in significant pressure in terms of outflows in the months ahead.
Is there a floor? I mean, people like Mohammed El Arian sees it as low as parity against the USD. Yeah,
I would be very surprised if we went anywhere near that low. I mean, I think we will see further declines, and certainly towards, towards 124, 125 looks quite reasonable. But I think, a lot of bad news has been priced. Yes, there will be more negative news on the economy. We'll probably see, as we mentioned, a bit more capital flight. But again, I don't think sterling is going to weaken as dramatically as we've been seeing. It'll probably be more of a steady grind lower in the coming weeks and months.
What about the Bank of Japan? We saw big swings in dollar yen in anticipation of this announcement. So far, hasn't been coming. How large is this fiscal stimulus package going to be? Some are saying as large as 10 to 20 trillion yen, which would be 2.5 to up to 5% of Japan's GDP.
There's obviously a big expectation now that something needs to be done in terms of fiscal stimulus alongside BOJ easing, which is likely at the end of this month as well. So we could see BOJ cut again the IOER, so more negative deposit rates, adding to also more easing in terms of ETF buying. So certainly more action both on the fiscal and monetary front, and that's why we've seen dollar yen also move higher in recent days.
If the BOJ makes a bold move, is there any reason to believe that this tight correlation that we've been seeing since mid-March or so between dollar yen and the 10-year U.S. Treasury, that is going to break?
Well, I mean, I think if anything, our view is still that dollar yen moves lower over the medium term. This move in dollar yen at the moment is short term. This bounce is likely ultimately to be sold into. But I think, again, it's on the expectation of stimulus of both from the BOJ and the government. And I think ultimately once this happens, I think dollar yen, the forces pushing dollar yen lower will continue to be in play.
Also interesting moves with the Chinese renminbi. Amidst all this talk about stimulus elsewhere around the world, we've seen some huge moves to the downside. It's down about 7%, 8% over a one-year horizon. On a trade-weighted basis, it's off much more than that, 12, 13%. And yet, why isn't it causing havoc as it did early this year or August? Or is it going to add another layer in a wobbly market environment?
Well, I think it's interesting that you say that. I think the reality is that China has communicated much more efficiently in terms of the FX weakness. A lot of investors now see the move in the currency as related to general dollar moves because, as you said, the basket itself is becoming a bigger focus. Yes, the currency basket, the trade-weighted basket is depreciating, but I think markets are just now much more accustomed to at least understanding how the dollar CNY CNY is moving. We think it will continue to move on a weaker trajectory, the CNY, and our view is that the currency should depreciate several percent more in the coming months. But again,
any target?
Well, I mean, I think at least a move through 7, if not